Hi there, I'm Tyler Bollhorn. Welcome to the Stockscores market analysis for July 6, 2010. Well, today is an important day because the market is trying to reverse its recent downward trend. Now, if we look at a few charts here, starting off with the Dow 30 ETF, you can see that we've been in a pretty steep downtrend over the last 2.5 weeks. The market gapped up this morning on overseas strength, but then the strength faded into the close. In other words, buyers couldn't hold back the sellers, and the sellers were fairly energetic and pushed prices back through the day. And really, that was the case in just about any market in North America. Here is a market for the Canadian dollar. Again, gapped up, was strong in the morning, but faded into the close. However, it looks to me like the sellers may be getting a little bit exhausted here, and there may be some hesitancy to hide money in things like gold. So here we have a chart of gold, and it has broken its downward trend in the last little while. Here a chart of oil. It's been moving lower in the last little while as well, but again today that downward slide was slowed. Now what I want to do this week is look at this 60-minute chart going back a couple of months on the S&P 500 and tell you what I'm looking for to call the reversal of this recent downward slide. It's a relatively simple thing to look for. So let's jump over and do that now. Here we have again a 60-minute chart of the S&P 500 ETF, SPY. And if you look back, each dotted line vertically is a day. So there's 6.5 hours in a day. And if we go back to June 22nd, which was June 21st, which was the high before this downward slide occurred, you can see that we have a pretty well-defined downward trend line, and the market gapped up into that today. So if you want to sort of focus in on the right-hand side of the chart where my mouse is, you can see that we gapped up and then got stuck at that downward trend line, and the sellers sold into that strength as a way to get off of some paper. Now, if you'll also notice, however, we have broken that cycle of falling bottoms, and I've highlighted here at the lows the bottoms have become flat, whereas over the last couple of weeks, each bottom is lower than the previous, and we have these falling bottoms on the chart, as well as falling tops, of course. So it looks to me like the downward momentum is slowing, and we're nearing that point where the market may reverse. Now, what the market needs to do is break through this downward trend line. In order for that to happen, what I expect is we probably need to consolidate sideways for a little while, and then we'll get that breakout through the downward trend line. Now there's some work to be done, but I think that has a good chance of happening this week because of what happened today. And even though it is disappointing for the buyers to have lost the battle today, in other words, they gapped up strong and then couldn't hold back the sellers through the trading day, it does seem to me that it's quite likely that we will get that break soon because the volatility is narrowing. Now, if we fail to break that downward trend line and instead break down again, well, then I'm going to be going short the market yet again. Now, what is interesting is that a few stocks have already broken their downward trend line. And there was a couple that I was watching today. This is ExxonMobil, and you can see that it broke its downward trend line on the open today and then started to trade sideways. So it held up better than the overall market. So I think ExxonMobil is a stock to watch. If we get a break to the upside from this rising bottom that is building right now, I'd be a buyer of ExxonMobil. Another stock that came up today was Corp, and we'll just pull up the chart here of Corp. So here we can see that the downward trend line was also broken here today, and we are, fading into that strength. But at the end of the day today, there was a little bit of buying that came back into the stock. I was a buyer of Corp today. I'm a little bit disappointed how it closed, but I have a feeling it could gap up in the morning, and I'll hold on to my position. Now, if it shows weakness on the open tomorrow, I'll probably dump it. But this is kind of my strategy, is because the overall market looks like it's going to reverse or has a good chance, it's testing that downward trend line, I'll start to nibble on a few stocks that are leading the overall market index. But I won't go too heavily, just buy fairly small positions in these so that I'm starting to build some positions if the turnaround does happen. Now, if the turnaround fails, then I've only taken a couple small positions in stocks, and I'll take those small losses. We'll have to see how that pans out over the next little while. I think what's important to recognize right now is that the market is heavily oversold, and when it is so oversold like it is right now, there is a tendency for the market to bounce back. Even though the long-term downward trend may not reverse, the simple fact that we have fallen so far below the downward trend line, we're way down here, it just means it's very likely to bounce. The market always comes back to the trend line. You can see here it was far away from the trend line and it came back. Here we have fallen far away from the trend line. It's very likely to come back. Now it may take a couple days before that gets started, but that's the trade that I'm looking for. Longer term, for this market to really reverse, we need to break that long-term downward trend line to the upside, likely from a rising bottom. In the short term, I'm meaning the next few days, we'll probably see the market break this very short-term downward trend line that's been building over the last couple of weeks. That'll bring it back to the long-term downward trend line, where the market will probably get stuck, where the market will probably roll over and head lower again. But you never know, we might get a break of that longer-term downward trend line and get a decent summer rally. Well, that has been the Stockscores market analysis for July 6, 2010. For more information on the tools and services offered by Stockscores, give us a visit at www.stockscores.com. If you'd like to use the trading desk, which is what I've been using here, go to tradingdesk.stockscores.com. You can see the address up here at the top of the page. It's a brand new website that we're on the final stages of developing. A few new things are coming there. And you can also subscribe to my daily newsletter at stockscores.com, where I do this sort of analysis every day. Have a great week in the market and trade well.